But I do want to start at a place that's at the heart of the American economy, and that's the small business. With the Payment Protection Plan, of course, there have been some hiccups at the beginning and delays in getting started. But what would you advise that the government do and that banks do to get money into the hands of these businesses faster?
Well, I mean, you got to execute on what you've already promised, obviously. I mean, small businesses have been told that this was coming since the legislation was passed more than a week ago, almost 2 weeks ago. And so, obviously, the rush was more than the banks were able to handle. And so it's just the banks have just got to do their job. And then part two to that is I think there's some banks who are actively trying not to take applications and to minimize the number of loans they make through the program, despite the fact that it pays a 5% commission, if you will, for the loans made for small businesses. So I think it might take the Treasury Department really pushing some banks who are unwilling participants to really start to push some loans out there.
Well, I would love you to elaborate on that a little bit more, because in the next coming months, we will see more non-performing loans at these banks. And so it could only become less attractive to be lending. What are you seeing in terms of banking activity specifically?
Well, that's the interesting thing and kind of surprising to me, because the reality is the Fed has said that they'll buy back all the loans. Plus, on top of that, they'll pay that 5% origination fee / commission for smaller loans. So banks have an incentive, and it's a unique opportunity for banks to pick up new clients. Never in the history of banking has a bank been able to say to a small business, I'll loan you money, and if you increase or maintain your employment, you don't have to pay it back. And so I really, truly expected that forward-thinking banks would use this as a way to attract new customers, because it's a unique opportunity. But they just haven't. And so it's going to take some prodding, unfortunately, to really get the stimulus in the hands of those who need it. And unfortunately, even more so, it's a race against time, because
Right.
A lot of these companies are looking at going out of business if they don't get that money in their hands.
Listen, the latest Federal Reserve package also looks to help a lot of riskier parts of the U.S. financial system, the junk bond market, the commercial mortgage market. Do you think that there will be a backlash like we saw in 2008, or do you think that there will be more of an acceptance that there needs to be aid to the financial system before it gets to the larger economy?
Well, there are two different things. One, in the Great Recession, it was all focused on insurance companies and banks and driven by derivatives. That's not the case here. This is something, with the pandemic that we're all facing and affects us personally. So I don't think we'll see the same type of backlash unless the Treasury, the administration really focuses on rewarding, individuals or big companies for some reason, but we haven't seen that yet.